I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim, and this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And of course, we hope lots of great ideas and opportunities for you throughout the show. This has been a fun week in Chicago. Man, I've spent a ton of hours in front of the TV watching the Chicago Cubs, of course, win the World Series. And there is a huge celebration going on here in Chicago. People just lining the streets for the parade. Lots of neat coincidences after this 108-year drought for the Chicago Cubs before they won it regarding that number 108. And you can see tons of this if you look on the internet. I'll give you a few examples that a baseball has 108 stitches, that the distance from the left and right foul poles out in the outfield in Wrigley Field to home plate is 108 meters. John Lester, our great ace pitcher, was born in the 108th largest city in the United States, and of course the Cubs won it in the 10th inning with 8 runs. There's lots of that out there, and wild stuff. Talk about wild stuff, of course. We're coming into election week, and we're going to see some fireworks as we get past this election. This Tuesday, we expect to see some big moves in the market, and based on implied volatilities that we're seeing in the market, the traders are expecting some really big moves also. The stock market has had a rough week here, as it's down 1.5% to 2%, depending on which index you look at. The Russell has been the worst, and that was a little tip-off to us that the market was turning weak as the Russell started to break down. Of course, the market has moved along with the prospects of Hillary Clinton. In other words, the markets will like it, right, if Hillary Clinton wins. At least that's what people believe. But her prospects have been falling. The race has been tightening up. So as the probabilities of Donald Trump winning get better, the stock market has gotten weaker. And we have seen that also as other news has come out during the week regarding the potential of Hillary Clinton's server being hacked, and of these 650,000 emails on Wiener's laptop. And so there's been more and more of that leaking out. Of course, WikiLeaks, more and more of the emails coming out. And that has tightened up this race, and that has gotten the market, investors, very, very nervous. We'll have more to say about that in just a couple of moments. The bond market, minor bounce. There's been a safety bid that has come in there, but the upside resistance is still holding. The dollar, that also had a safety bid, and after that brought a bounce in the euro and in the British pound. That British pound news behind that getting a lift was about the court that said that Parliament would have to vote on the Brexit, so that's going to slow things down, and so that brought a bid in the British pound, helped the euro. The dollar started to slip back. As the dollar starts to slip back, we got a rally in gold and silver. Gold went up about $25, a little better than that, a couple percent. Silver was up 3%, so nice gains in there. The oil market, well, that went into free fall. There's a lot of disappointment leaking into the market here about OPEC and the producing nations not being able to come up with a freeze. We were anticipating that happening, and certainly did, and there was a lot of weakness that came into the oil market, weaker than actually we anticipated, with a decline of some 8% on the week. So oil really having a bad week. This can be a little bit different show than we've done in the past because it is election week coming, and there are a lot of scenarios. The scenarios I want to talk about are the ones that are the highest odds and maybe the one that is lower odds. So the market has been expecting Hillary Clinton to win, and that's why the stock market has held up near the highs for so long, giving up very reluctantly on market declines, with buyers seemingly coming back in. So under the scenario that Hillary Clinton wins, and because the race is so much tighter, the Senate is up in the air. We don't really know about that one, but the odds of Republicans holding the House are very high. I mean, it's just the numbers don't really work out to the Republicans losing the House. So that's a gridlock situation, and of course, the FOMC stays in control. Control of the economy, basically, control of manipulating interest rates and our currency, and that's a scenario that has been extremely frightening to me, but that's really what the highest odds scenario is. Under that condition of Hillary Clinton being elected and the status quo gridlock situation remaining, we would expect that stocks would rally, that the bond market would decline, and because this is a very inflationary scenario with the Federal Reserve, hanging in there, keeping interest rates near zero, then, that bond market decline would be in alignment with gold going up and oil going up and the dollar going down. Because the dollar goes down when you produce more of them, that's a negative scenario for the dollar. So that's all an inflationary scenario. We think that the market going up will be a temporary celebration and then setting up some failure, and we're going to say it now, after that moving into a real bear market. So that's the little bigger picture and what we think will happen if Hillary Clinton wins. Now, Donald Trump winning is lower odds. As a matter of fact, the odds makers are making it 3-1 against him. And when you look at the road to the win for Donald Trump, that map looks really tough. He's got to really thread a needle to get beyond the blue walls of the coasts where Democrats really have a strong hold. If President Trump does win, if that is what occurs, he will likely have a mandate because his coattails will keep the Senate in Republican control and also the House, and that is going to be, for the markets, for investors, a very scary situation. The FOMC is likely to lose control, and that would be a great thing, and the markets would react quite differently, quite negatively to that. That is a very deflationary scenario. And though it's lower odds, it's something that we really have to think about. Under that condition, we think that assuming we know that on Wednesday, that the stock market, the S&Ps would be down 30 or 50 handles, maybe 100. We think it would be a very negative scenario. The bond market would go up sharply because it's a deflationary scenario, and what we would see happen is the dollar go up. Remember, deflation means a more demand for cash, more demand for the paper currency, so the dollar goes up. In that condition, gold, silver, oil, they all get hit really big. So Donald Trump, deflation; Hillary Clinton, inflation. Hillary Clinton keeps the central bank doing what they've been doing, and Donald Trump hopefully puts an end to that. So there's a million other things to talk about as far as all of the different issues out there, but they're not talking about them. So I'm not going to either, because I could spend another hour on this show talking about what they didn't talk about. But this is what we have, these two sad choices for president, and we're really focusing now on how the markets will react. I think if Donald Trump wins, then remember I said if Hillary wins, the market rallies and then we go into a bear, the stock market. I think if Donald Trump wins, well, the bear's already begun. That's basically what I think about the bigger picture. So back in August, I did a video, and the video that I did compared election years. And everybody, thinks, well, election years are positive years, right? Markets go up because, well, the Fed is accommodative. They want to keep things calm. And what I proved, looking back at 17 different election years, that's presidential election years, so we went back into the 1960s, that each of those election years had significant declines coming into the election. That beginning either somewhere in August, September, or October, a stock market decline began, often went through the election time. Of all 17 years, the smallest decline in that period was 5.1%. And I said, it looked like it was going to happen again because this was even a wilder year, right? Maybe like 1968. And sure enough, here we are. As of today, 5% decline from the high to the low in the S&P 500. So amazing how some of these things do repeat. I actually want you to see a little snippet of that video just so that you can see what I showed at that time. So here it is. What I've showed you is that every single one of the election years for the last 17 years has had at least a 5% decline in the last half of the year coming to the election, all actually starting August or September or October. So here we are at the end of August, so it's essentially September, October is what makes the most sense. And declines were, reasonably, 5, 6, 7%, and not excessive at 11 to 14%. That is probably shocking, right? Because nobody really expects much of a correction, especially here in election year. But I just showed you that every single one of those election years had some kind of a measurable decline. Granted, a couple of them were only 2 or 3 or 4 weeks long, but nothing less than 5.1%. So what does that mean in today's terms if the stock market were to have some kind of a significant break? Well, here's the S&P weekly chart in here. And what I essentially put in here was the corrective levels in here, and also put in what the percentages would be. So how does that work? Well, right now as I do this, the S&P 500 has made a high of the 2193.81, an interday or interweek high right there. I've talked about resistance, in this area and also at around 2212. So if it was a modest year, if we're still following the trend of some kind of a decline in September, October, beginning in September, October, as in the last 17 election years, a modest 5% break right over there, which would be above the intermediate 38.2%, would be down over here, down to 2081. That would only be a 112-point break in the S&P 500. Truthfully, that's my highest objective for what I think is going to be the 18th in a row as far as some kind of a decline in an election year. If it were all 7.5%, that would take you down to 2031, which would be a 162-point decline. And if it were a 10% break, it would be down to 1974. Which would be about 220 points on the downside in the S&P 500. So let's just make that 18 years, election years that we've had these large declines coming into the election. 5%, not so much, right? Like I said, possibly 10%, 220 points down in the S&P 500 in this particular wave. That would be possible if Donald Trump wins, because there's going to be some big selling. Hillary Clinton wins, well, it gets rescued for a little while. All right, so now let's look at what happened to the stock market in this past week as we switch over to our 60-minute chart of the S&P 500. Here you can see, as we take a look here at this chart, the gray area is the area that has the overnight trading, and the white area is the area that has the trading during the session. So what we saw here on Monday was a market that was very nervous. Hillary Clinton, well, then some news was coming out about that FBI probe, of course, and that had the market nervous and tried to rally during the day, but then came off right over here. On Tuesday, the polls really started to scare investors. There was some China data that came out stronger that you can see right over there that gave the market a lift overnight, but then as you know, the market opened up during the day and people were talking about the ABC poll had Trump in the lead, they were really scared again. Gold and silver started to move up, and there was a big decline in the market. Other economic indicators that came out, like the ISM, pretty much in line. But gasoline had a huge surge that day that seemed like it lasted only minutes on a pipeline explosion. And that disappeared very, very quickly. On Wednesday, world markets, they were lower. They followed what happened in the stock market the previous day. Oil was falling on poor odds for a deal coming out of the producing nations. FOMC, they came out and they said that they are holding interest rates where they were. No big surprise. More jawboning and hinting about December. There were a few different there were two different dissenters. There were three a month ago as far as the Fed governors, but they held rates, and who knows what they're doing. But the stock market, you can see this bar right over here is where that news came out, and it continued its downward ways. On Thursday, stocks were mixed. Facebook weighed on the market because it had a really big decline after its earnings. Their talk about their future growth is really what got the investors nervous. There was a pretty good uptick right over here overnight as some news came out that Hillary Clinton was a little better in one of the polls. Here was some news that came out over here that said that the Brexit might not happen so fast because the court says that the parliamentary members are going to have to vote on it. So that gave European markets a temporary lift. The British pound started to rally. So those pieces of news got a rally going in here. But I tell you, Facebook weighing on the market right in here, that really sent the market to the downside. Friday, world markets were really weaker as they followed the U.S. down. The polls tighten up again. Some of them have Trump slightly in the lead. That news being worse for Hillary Clinton, especially around a potential that there were 5 countries, it's reported, that potentially had hacked her server, so that's really not good news. The jobless numbers come out, the payroll number, 161,000 jobs created. That was a little bit on the softer side. The unemployment rate ticks down to 4.9%. U6 is a bit stronger, comes down to 9.5%, still a ridiculously high number. And wage increases are starting to pick up, the highest since 2009. The bond market gets a little bit of a pop based on the fact that the payroll numbers were a little bit softer than expected, but believe me, that bond market move is highly in suspicion based on the patterns that we see in the market. As far as the calendar for the week goes, you can see that the earnings reports are really dropping off in here. We're getting towards the end of earnings season. This is when you start to get a lot of the retail category reporting, and you can see in here that before the opening you have CVS, and then you have Macy before the opening on Wednesday, Kohl's before the opening on Thursday, JCPenney before the opening on Friday. So here you have Nordstrom and Courts here after the close on Thursday. So it's really a big week for retail. Of course, the biggest event on this economic calendar and dwarfs everything else in potential meaning is the presidential election. We can expect that the market will be very quiet that day outside of something really ridiculous happening to affect the markets, and we don't want to hear any of that. And then Wednesday, assuming we have the news on what actually is the result of the U.S. presidential election, we will have some giant moves in the stock market and other markets as we finally find out which of these two candidates are our next president for potentially the next 4 years. Who knows for sure? So, like I said, this is going to be a little different show because we have so much of an election focus going on. I'm not going to do the best and the worst for the week. There were hardly any significant upstocks this week anyway, so I'm going to skip that. So what I'd like to do is hear from you. Write me an email at slim@askSlim.com. Tell me if you missed having the best and worst for the week. We're kind of trying to figure out what you want, how to make this show bring you the most information in the shortest period of time without getting it too long for you. Also, let us know, we stopped doing interviews because that was making the show really long. So we want to know if you missed that or if you don't miss it. And also that section we used to do in viewer emails where we answered a number of your questions. So if you missed this normal segment here of the best and worst for the week or the interviews or viewer emails, write me an email and let me know about that, slim@askSlim.com. All right, so we're going to move over to the short-term view of the week for 5 major markets right now. All right, here we go. Before we get into that short-term view, I want to quickly tell you about a special that we have for this 1 week only. We had a number of people that had asked us about that last special that we ran, had great response to that, and a lot of people had missed that. And what we're going to do now is offer for 1 week only that same special. Here's what it is. Here's what we do. RV and I look at these charts for massive hours every single week. And we do analysis on 400 different symbols approximately. But we do a really focused analysis on the 81 best traders as far as stocks, ETFs, and futures go. So we do some pretty deep, extensive analysis on those on monthly, weekly, daily charts and intradays. And what we do is we've compiled them into one easy-to-read page that we call our rankings and setups. That's our level 3. And what we give you is our rankings long-term, intermediate-term, and short-term. And also what we call is our option bias. So looking at one page, you can see an amazing amount of analysis for investors or swing traders or option traders. It's just great. And our option bias analysis essentially gives you the highest probability of how to direct your option positions if you are a strategic option trader. So I think you can get a nice edge by having this analysis. Also, we put out our trade setups. We do about 1 to 3 of those a day, usually 1 a day unless nothing is showing up, and so we put those on there also where you can have a what we think is an edge in a high quality entry. We don't give you trades. Essentially, we let you figure out your own trades based on your own style and risk parameters, engagement in the market, experience. So you can really use this page to help you with all of that. We think it will really raise your odds of success. So all of that is just amazing analysis. And you get all of our 8 categories of videos, which is some 200 something videos in our library, and amazing things. You can go look at our level 2 membership, which is included with level 3, and see these 8 categories of videos. Yes, you'll get our Wednesday future speak, and you'll get all of our stock sectors, and you'll get our trading psychology videos, and just an amazing amount of videos and a fantastic library for you to learn in. This is for first time subscribers only, and all of that, try us for a month, $43. It's half price, and I think that it's an amazing opportunity. You don't like it, you'll just cancel. We'll end it in a month, and if you like it, believe me, you'll be happy to renew. So that is our special that we offer 1 week only. Send me an email, slim@askSlim.com, and I will send you a special link. We'll be sending those links out on Wednesday or Thursday, and then you'll be able to have all of that for a month for that ridiculously low investment. So that's it. All right, let's get into this short-term view for the coming week. This is, again, this has been a different show, and this is going to be different also. How can anybody, pick what's going to happen in this coming week? Really, there are 2 distinct scenarios. I talked about Hillary Clinton, inflationary, status quo, Donald Trump, deflationary, wild card, we don't really know, big changes in the markets. Hillary Clinton probably gets celebrated by the stock market. Donald Trump scares the what out of everybody, and the market gets sold. That's what people expect. That's what I expect. But how do you look at these markets and say what's going to happen? Well, I'm going to do something unusual. I've redone these short-term charts, and I'm going to send this out to our level 4 subscribers who get all of our charts, all 400 in a chart grid. And you'll have this update right now that has the scenarios with the support and resistances based on what I think will happen, based on who wins. So we're going to look at 2 scenarios in all 5 of these markets. So first, we always do an accounting of how we did in the previous week. We're going to get a 65%. We've been pretty much running in that area, 65%. The light crude market fell harder than we expected. We said downside risks exist. We expected it to be a down week, and we got that. But it broke below the supports that we expected. So we only give ourselves half credit for that. The gold market, we said up week. We thought it would get to 1,300. It gets up to about 1,308, a slightly higher range than we expected by about $8 or $7 or $8. So pretty much spot on when you look at that. The euro market, we thought that it would go up and then roll over again. Well, it went up and it went way past our resistances by a whole penny. So we get no credit for that one at all, as the dollar had a pretty good pullback, which gave, of course, gold a lift. The bond market, we thought that we'd get some continued weakness in there, but that we get rallies into resistance that failed. So in other words, the intermediate patterns are really bad, but we thought we would get some bounces into resistance areas that would fail. Basically, it's been kind of a choppy week in there. The 10 years got a little bit higher than the resistance area than we thought. The 30 years got pretty much into it, and each time they've left tails, that's when they go up and they fail. So it's pretty much doing what we expected in there. And the VIX we thought would get up to 18 to 20. It got up to actually 22. I'll show you that chart where I put the election in there and where I thought it would go up to 20. I tweeted that one out. You could see it in my older tweets where we thought we would get that pickup in implied volatility. So that all pretty good. 65%, we'll take that. That's 2 to 1. Where do you get 2 to 1 on a pretty consistent basis? All right, so now we're going to look at what we think is going to happen in the coming week. The chart we're going to start out with is light crude. Then we'll look at gold, the euro as a proxy for the dollar, the bond market, the stock market, and the VIX. So here is that chart on light crude. And you can see that as this market saw that OPEC, when producing nations, were not able to pull anything together, this thing had this huge move down. Right now it's down about 8% on the week, and that is pretty poor. So what we see now is that, well, there's a key level that we see right in here, this cycle low that you can see right there on the 78.6%. So here's our two scenarios, and this is the way we're going to look at this pretty much throughout these 5 markets that we're looking at. Under the condition that Donald Trump is the winner, then of course we said that Donald Trump is deflationary, and we would think that oil would continue down. Now, it's given up a lot of ground already. Note the DJT right here, Donald J. Trump. We think that a decline will occur below this 43 level and potentially down to the 41 level, which is this major cycle low way back over here if Donald Trump wins. This is all really a support area, and being that it's given up so much ground, if it fell hard in here, it would be day 10 of this decline. 10 or 11, we would believe that it's going to have a sharp bounce out of that area. So if Donald wins, down into this support area pretty deeply. Hillary Clinton wins, then the inflationary scenario gets you a tick up. We think that this resistance zone between 46.80 and 47.80, which would be a normal bouncing area that we expect it to go, is about the area that we would get a bounce to. We expect if it gets up there, then it would fail and then move down, but that might be a week or two down the road before that happens. So Hillary Clinton up to the minor resistance area here, Donald Trump down to this major cycle low over here. This is not, I'm saying if they go up or down, this is saying they're going to go up or down, but we want to get some sense around where the important areas are. So that is a look at the light crude market. The next thing we're going to look at is the gold market, /GC. So I'm blowing out to 10 years here, so we're going to come in and get a closer look. So you can see in here, I've done the same thing. I've put in the Hillary Clinton level right over here in gold. I've put in the Donald Trump level right there. Hillary Clinton inflationary, keeps the FOMC in place, and gold likely has a big uptick. That would really skew this smaller pattern, this silver pattern in here, but it would be very much in line with extending this rally. We would think that under the Hillary Clinton election, we'll get up to this resistance zone, 1333 to 1347. And then have a pretty sharp pullback from there. So we'd be a seller in this area up over there under that scenario. Donald J. Trump wins, then the scenario is a pullback to about 1270. Then you're in this scenario where this cycle comes down, and it comes down for about a week or week and a half, and then you get another rally back up into this resistance zone. So again, Hillary Clinton up here, 1333 to 47, Donald Trump down here around 1270 to 1277 in the gold market. Both of these we think are fades. In other words, if they get up into those areas, we would expect it to be a panic, and that they would be opportunities to take a counter trend trade up in those areas. The next thing we're going to look at in here is the euro currency. So like we said, we got this one wrong in the last week because the dollar got weaker than we expected. Now, it's got up into this fib confluence area. Under the scenario of a demand for dollars because of a deflationary scenario, that would be a Trump win, then the euro would fall. Dollar goes up, the euro down. It comes into this minor support area. We would expect it to fall down under the 110 number. It's now 111.40 approximately. So it would be a penny, penny and a half to the downside or worse. Under the condition that Hillary Clinton wins, that would be an inflationary scenario, negative for the dollar and positive for the euro. We would expect it to get through the confluence of resistance and then move up to this area of about 113 right up over here, 113 to a potential of about 113.50. You see these areas, these highs right in here. If that happened, we would believe that it would be temporary, that it would be a sell up into this area. If we fell down sharply into this area over here, we would believe it would be a buy somewhere under the 110, maybe as low as somewhere down over here around 109, 109.30. So again, we're talking about fading these moves, but they're likely to be some pretty big moves. So that is a look at the euro currency. Again, looking at inflationary and deflationary scenarios of Hillary Clinton or Donald Trump. Next thing we're going to look at is the bond market. We'll look at the ZNs and the ZBs. Let's first look at the ZNs. Now, the ZNs, the 10 years, because the yield curve is steepening, has done a little better. It got slightly through the area of resistance. We've removed that out of here. The minor resistance that we had in there got slightly through it. We thought it would be basically in the right around the 129.31 area was the peak. It kept getting up through there and then pulling back, but now today it's gotten a little bit through it. So this is the short-term resistance right in here. The scenario, if Donald Trump wins, which would be deflationary, would be that the bond market rallies. We see it rallying potentially up to this 78.6%. That's 131.07 in the 10-year. Under the condition that Hillary Clinton wins, the inflationary scenario, we think it falls down to this level, which is a 61.8% fib extension, near where it got support right over here, or lower than that even. So we think that there could be a pretty big drop. This next extension level is at 128.23, and we could see even getting down there. The cycles suggest the downside, the Hillary Clinton win, though if it's the Donald Trump win, we think it would come up into this area and then roll over for another decline right out over here, bounce back up, and then down again. So that's kind of a longer term picture that we're looking at. But, up here, Donald Trump at the area of about 131.07, and Hillary Clinton down at around 129.05, or down here at 128.24. So that's that scenario. When we look at the ZBs, you'll see that our scenario on the bond market was pretty much spot on this week, as that minor resistance has really held it as we expected, and all these rallies that we've gotten in there have begun to fail. So under the condition that Donald Trump wins, then you have that same thing that we talk about as the condition for a deflation, and what we would expect is a move up into the short-term resistance zone, getting through this minor resistance. That would take you up to 166.10 to 167.03. That's right up over here is about 167.08. So this is the Donald Trump scenario up into there. We think if that happened, it would just roll over again and finish this cycle pattern. Though I got to tell you, we might have to let cycles get reestablished after this election, because things could really be off. You can see the bear flag that's been forming in here, and that really favors the market coming down again after the election. So we'll have to see if it just goes straight down or rallies first and then comes down. So this is a look at the ZBs, and again, the Hillary Clinton is an inflationary scenario, right? And that brings the bond market down, and Donald Trump is a deflation scenario, and that brings the bond market up into those zones that we just talked about. So the next thing we're going to talk about is the stock market. We had talked about these patterns in here, and that it was a high likelihood that we were going to see the stock market weaker. We looked at the Russell, the RUT, and that was giving us a sense that there was a breakdown earlier, and we have been showing on FutureSpeak our market condition indicator, which had really been showing internal breakdowns in the market. So, with that going on and the influences of the election polls, we saw the potential that these cycle patterns were pointing down and that we could get a pretty big decline. And as I said, we kind of expected that election year scenario falling like 5 or 10% was going to be in place, and we made that as of today. So what we're going to look at now in the stock market again are these two scenarios. But I've got to tell you that last week what I said was that there was risk on the downside in the market, and I was making a bold call. I thought we would get to 2114 in the S&Ps or even lower. We get down to 2083, which is that 5% number, and then we get somewhat of a bounce. The downside risk in the market is not going away under any scenario here, no matter who wins. It's just that if Hillary wins, there's likely to be a bounce, and then I think fail. Because the prospects of status quo may not actually be that good, right? And we've seen the stock market deteriorating anyway. So we think that under the case that Hillary Clinton wins, there is a relief rally in the stock market on the upside. So here we still have the bond market, so we're going to move over to the SPX. And you'll see the S&P 500. Now, I can't really get the Donald Trump scenario on here because the chart doesn't go down far enough, and I don't really want to squeeze it. So what we said last week was that, we were in this scenario of a decline. And then I've had this on the charts since we broke the warning levels in here of this being a high-risk period all the way out into November. Those risks are still there, and we could get a bounce. And we started to get a bounce here on Friday, but the market's having a hard time even holding that. So we thought that this cycle right over here was bringing a decline. It did. We think that you could get a little bit of a bounce in here. And if Hillary Clinton wins on Wednesday, you could really be bouncing on the upside in here. But to where is the question? And I'll show you that in just a second. So this scenario is such that I think that if Hillary Clinton wins, the S&P 500 is going to move up for some number of days on the upside. Now, our upside projection on that is 2140 to 2152. So that's like 50 to 60 points on the upside. That's right here, this important minor 78.6%, and this beginning of this short-term resistance zone. That's kind of the Hillary Clinton scenario. Now, it could stop even lower, 2127 right there. That's a 30. That's the minor 61.8. That would be roughly a 37% rally, 37-point rally, which we would think we would get in about a week's time, and then roll over again. And then we think this bigger pattern in here is likely to take over on the downside. So I have to show you the weekly chart in order to look at the Donald Trump numbers. So I'm going to switch over to the weekly chart, which I don't normally do in this segment, but I want you to see what that looks like in here. The intermediate support levels are right over here, and that is the zone that we would expect the stock market to fall into. The top of that support, which shows the DJT support, is at around 2047. So that's about 43 handles down from where they are right now. The bottom of it is right around that 2002 area, which is about 90 handles on the way down. And I think if Donald wins, you could see that type of action. Now, this all exists in a little bigger picture in this declining mode over here, which we think lasts, if Donald wins, at least 3 more weeks, and likely the beginning of a bear market. Let's take a look at the daily VIX here as we move back to the S&Ps and move to VIX. We tweeted out this chart where we showed that we thought that when the election came, we would get up to about this 20 level. We were way down over here when we tweeted that out, and you can see it follows this pattern up really nicely. So on election day, what we expect to happen is that you're either going to get a Hillary Clinton win and you plunge right in here. We think you'll get down to 14 to 15 in this scenario. And if Donald Trump wins, you're probably going to pop up to about 30 and then pull back in here, but then you'll probably be pumping up again in implied volatility. So I think if Hillary Clinton wins, it will instantly get a cave in implied volatilities. If Donald Trump wins, you're probably going to get a huge pop in implied volatilities that will then give it up kind of quickly. But then I would say they will stay elevated basically under that condition. So man, we talked about a lot, didn't we? And all of these two scenario possibilities. I couldn't see doing it any differently, honestly. So, some of you might say, sure, he's going to say they're going to go up or down, but that's really not the case. I really wanted to give you a sense for how to best take advantage of what will likely happen after the election. What will be really interesting will be if my thoughts about inflation and deflation and about how the markets will read that based on who wins, if that holds up. And that's what I really will score myself on the best. That I think that how well was I right about the reaction in the markets, and then how big were the moves in each direction if they moved in the direction that I thought would happen. So it's going to be extremely interesting, and overall I think that the scenario moving forward for the big picture, which I'll talk a lot about as we move forward, is one that is going to be a difficult environment for investors overall. I am looking forward to this week, to the election being over. I'm sure that many of you are also, and I hope that this country stays safe through this period and we don't have any crazies out there for sure. I want you to be safe in this crazy world. And as always, I'm wishing you great trading.
Well, I'm going to the city and I'm going to do a city.